What's up, folks? Happy Friday to you. Coming to you today and feeling really good. You always feel good after a good win, and I've been waiting for this move for quite a while. Took a lot of patience, but finally we got it, although now the move is over. I'm talking, of course, about the recent crypto crash, which wasn't really a crash. Some say that it entered bear market territory this week, but actually, if you watched last week, you know that it was Friday of last week where the Ichimoku Daily cloud setup went bearish. And that's what we're going to talk about today, because we really need to revisit this, because this is going to become very, very important in the coming weeks as this develops. And so today's going to be a teaching lesson. Also got some stuff to say about the market as a whole, the SPY, as well as VIX. And a lot of interesting stuff happened this week. But we're going to get into that in just a second while people filter in. So hang out. I'll be right back. I'm muted. Ah! Oh, like I said, you didn't hear me, but yeah. Okay, so, yeah. My mic. So what happened was I was so excited to get things going that I've done that before when I was really excited to do a live stream, and I completely forgot that I had my mic muted. I even put some extra time. What happened was put some extra time into getting my mic levels set up. So, all right, I'm excited to do this. Apologize, guys. So today we're going to talk about Ichimoku in regards to Bitcoin because I think it's really, really important. Also got to talk about the stock market. Big things happen in that, including with the VIX. All right. Thanks for yelling at me, guys. Just flood the chat if I do that now. Doing magic with hands. Yeah. So anyway, I did a couple of posts this week, which we're going to go through. What I was saying was last weekend, I got asked by TradingView to do a French language version of my ideas, and so I did. This was when it was setting up on Friday, and the key thing really is when price gets below the cloud such that the momentum or the lagging span or Chicago gets below the cloud as well, that is when this signal fires. It's very, very simple. And I've gone back in time. I know you're not supposed to sell your Bitcoin. You're supposed to sell a kidney or some other part of your body if you need money instead of selling your Bitcoin. At least that's what I've been told. And nevertheless, if you go back, 14 years, you can see that actually going in and out based on the daily Ichimoku outperforms just a pure hodl. If you just bought one Bitcoin in April of 2011, right now you'd have one Bitcoin, but as this goes along, you would have about 5.65 as of the close back up at where it was on Friday of last week. Now, that's not to say that I think that this is going to be the end of Bitcoin. No. There's actually two very prevalent scenarios that could happen. But as far as this goes, the reason I'm excited is because I had a good week, because I've been waiting for this to happen. I've been waiting for finally the bubble to pop on MicroStrategy. It has entered the valley of risk. That is a term that I coined, which describes when a stock gives up its 50% level, which is going to be really important in Bitcoin, like I said, and it enters into basically this territory right here, where there's really nothing to hold it up. Possibly you get some support at 190 or 160, or you come back into it. It's just, you never know. And if you're long and you're very invested in it, you're not going to know what to do. And that's why you're in this valley. It's foggy. You can't see how high it's going to go, can't see how low it's going to go. You're just in it. And the best thing to do is just stay out. And when something breaks the 0.5, you got to get out of it. And I talked about that in my post about MicroStrategy entering the valley of risk. And so I use an example of Zillow. It's an example of mine where I'm going to post this in the chat here. Because this is an example of Zillow that I've used before. Like when something gives up its 50% and half the people that were into the rally have given it up, you just never know when something's going to happen. Or you never know when it's going to stop. If you sell it, it's going to fly up. If you hodl, if you back hold, it's just going to grind it away until you sell it, and then it's going to pop up. So you want to try to avoid that. And I also talked about, I prompted by a question that was, or a comment that was made about what would happen if the stock market crashed. I stayed up late one night and did some research, which I'm going to kind of run through real quick about what most likely will happen in that case. That doesn't have any directional bias to it, but we'll talk about that. And of course, I think I posted this yesterday, last night. I keep on telling people, by the way, and so the reason I took that short as a quick thing is price on Friday of last week popped up in addition to getting ready to break out to the volume profile cheat code for finding supports and resistances. I mean, we can just take off Ichimoku and we can see basically what was happening for the last month. Boom, 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 boom. This is the volume profile. In other words, the place that trading was done the most by volume for this entire consolidation. It gave it one last pump up right when the bearish trend was about to start based on Ichimoku, and it finally broke. And where did it break to? It broke to, I don't need any RSI. People are like, oh, well, the RSI is doing this, the chart's doing that, 50%. And that's why posted it wherever I could because it was so clear to me, 79,285. That's there. If you're bullish, that's your buy. And then we'll talk about what Ichimoku means for why it stopped there and why this is not the end. There's two clear scenarios it's going to go into. So, by the way, if you have questions, make sure that you post them in the chat. Like I said, I'm kind of excited to teach about this because it's a great teachable moment for why these things work. And we're going to go back and look at Bitcoin's price history and see, what how useful it is. One of the things that I've done over the last week or two in preparation for this was code up a little indicator that highlights when this signal fires. And of course, we're going to talk about the false signals as well, why they happen. Doesn't matter in terms of the 14-year study that I did. They were all included in there. That's why it's not just ridiculously outperforming just a pure hodl. It's, you're going to get chopped out when a trending strategy and the instrument no longer trends. But overall, the key is to avoid the massive bear cycles. And I'm going to steel man the case that the bear cycle has not yet begun. I am. We're going to talk about the reasons why it hasn't. I don't even need to really say the reasons why it has, because what we're operating in is essentially, let me pull up my handy dandy logarithmic here. So we'll do, let me just clean up these right here. So I just got the halvenings here, and we're not going to try to make highs based on lines and stuff like that. But we'll look at what most people do when they look at the halvening price cycle to figure out, okay, what is this? What is this move that we had? All right, what is it potentially? So a lot of people, what they do is they, and I'm still manning the case that this was just a dip. A lot of people look at the time after the halvening. And of course, I think that the first one was, it says 12 bars back in 2013. And it was 17 bars in 2017. And depending on where you are, it's either 11 bars, but we'll go ahead and say 17 because that's the actual new all-time high. It was 18. So it's 12, 17, 18. All right, that's what people ever look at. Now, statisticians would be rolling over in their graves or just pissed off that we're using 3 instances to determine something, but that's okay. But if we go out 17 bars, then that puts the high later this year. September, November, whenever. If you've really been optimistic, as I saw someone did, they said November because that's 18 months. That's the same thing as it was back in the last cycle. All right. So everyone pretty much agrees it's this year. Right? It's just they want a little bit more. Then they'll have enough. Yeah. Well, I think though, what's interesting when I listen to people talk about their prospectuses, they're looking now, getting a little bit more conservative. Some people are 1 million Bitcoin. I mean, Bitcoin's market cap right now is about 1.75 trillion. To get to 1 million, you need a 10x. So I really question that narrative. I mean, where are you going to get $8 trillion of market cap? Really, well, I know what the answer is. It's hold on, let me find it. Oh, never mind, I didn't say that one. It was a meme. They told me nation states were buying, bro. Well, that people are still optimistic that Trump's going to do anything, but I actually have the maybe unpopular opinion that Trump killed it. Like it or not, Bitcoin is not crypto. But like it or not, crypto as a whole is a brand. And the president, who was going to be the crypto president, first use of crypto was for a grift, which is what it was, the Trump coin, is not a good look. It's just not a good look. And so, yeah, I think a lot of people see that and they're kind of like, I don't know if I want to be involved in that. And a lot of people disagree about the diminishing returns of Bitcoin's high, but I think it's a function of the market cap. You need a lot more money. You need $8 trillion to pump up, or roughly somewhere around there, of $8 trillion of market cap to have it go a 10x from here. And so a lot of people are being a little more conservative, and they're looking at the cycle and 3,700%, 1,500%, 248%. If we just put that in half, at about 125, and we put it out to there, then maybe we're going to get about 150. And so the question really is, if we're looking at what we have before us, and we kind of ignore all the speculation, it's going to end this year, maybe about 140, 150, maybe 200. What's the risk reward? Well, we know what the risk is. It's anywhere from 78 to 94% downside. But volatility has been decreasing, I've been told. Yes, that's true. So let's say we get a negative 70%. So is it worth getting, what is it now? 84. 84. Let me do some grokking here. Hang on. So what percent return is needed to return from minus 70% drawdown? I could have figured that out with math, but this is a lot quicker. So I should tell it to keep it short. You need 233% return to come back. And so what is the return from 84,000 to, let's say, 150,000? So that's 78%. So you're looking at a 80% upside within all these models that people use versus a downside that you would need 233% to return from. The risk reward is just not there. But the time may be there. Let's get back to Ichimoku. Any questions, by the way? Anyone want to tell me I'm wrong? I've been keeping pretty good about my not arguing with people. I'm not going to argue with people about crypto or try to change their minds. I'm just going to state what I think and what I'm doing. So, by the way, don't know if I was about to say this before, or post this before. Let me find it. Yeah, I got an opinion about Ethereum too. There's an interesting chart pattern on Ethereum that's been setting up. But also is this. So you guys know this is my favorite. And actually it came to a support today, Monero. Last night, when everything was just absolutely dissolving in price, there was a stubborn little winner. Somebody with a use case. Monero. You're not going to get rich with it, but it has been the safe haven flight to safety. For some reason, still inflationary. It's not fixed supply. Governments aren't going to put it on their balance sheet. They don't really want you using it because they can't track it. They're not going to be able to track your spending because it's actual sovereign money. It's not surveillance coin. But I got to note that. People need to be aware. So Bitcoin and Ichimoku. Why did it stop there? As I said, it came down to the 50%, just simple enough. Now let's overlay Ichimoku. Now you'll notice that the green line here is the Kijinsen. That is the 26 period 50% level. And it's not quite, this is the weekly, by the way. It's not quite on that level right there. And that's because it only measures 26 periods. That's why you'll see me draw the 50% manually to actually encapsulate the true trend from high to low. And in this case, it's going to be the lowest low before the swing low. You could have maybe done this swing low in September up to here, and that's where you're going to see it. But the more precise one was the one from the major swing low here back in August. So that's why I called that last night. But it also, if you look at it on the weekly, if you zoom out, bro, still pretty bullish. It's not ready to go bearish yet. And there are 3 recent events, if we look at Bitcoin on the weekly with Ichimoku. Let me go back in time. So here's the present. And then let's go back to the last time there was a major, big old scary move. That was, of course, May of 2021. And then prior to that, was 2017. Big old scary move. Wait, why'd you do that to me? Don't do that to me. All right, we're going to have to look at this one by... I had it up before. That's weird. Okay, that's 21. You know what? I'll tell you what we'll do. Do Coinbase. See if that's why it's giving me grief. Messing up my momentum. Okay. All right. Anyway, we'll look at it one at a time. How about that? So, if it's going to be like that. All right, let's go back to 2021, and we look here. Boom. That's where we had a big scary move in May. Why did it stop there? Hey, look at that. From the low of COVID up to all-time high. Ooh, wow. All it takes. And of course, most of us were there. Most of us are OG Bitcoiners. We were there in 2021, right? That's because that's what OG Bitcoin means. And that's where it hung out for a while. And I think that's probably what's going to happen because the weekly is not set up quite yet. You remember the rules of the daily? You have to get price as well as momentum on that side of the cloud. And, if you remember, we got another higher all-time high later in that year, which kind of fit, again, that longer period of months that you'd be looking for in the cycle. Made it all nice and fit with what people were expecting. But what that does with Ichimoku being time-based is it gives time for that momentum, because this is a trending following indicator, and this is momentum, to then get itself on the weekly out as well. And of course, we know what happened as time went along. We're just going to skip ahead. Once it got down, again, that's when the bear trend started on the weekly. However, it didn't go really that far, because if you're waiting for the weekly to set up, it's pretty much already matured. And of course, it bottomed out with the FTX. And you didn't really get much out of a short here. You're just not going to. And of course, that is that's again, what happened. You're going to see it as well. Again, we're going to go back to 2017. And let's see, go from here to here, down to the low. Once again, I got to see, where is it? There's the swing low, basically there. Of August 2015 up to here, and once again pull back to a 50%, but the weekly is not set up to go yet. Even though it went very bearish, the trend, the true bear move of the bear cycle, kind of nasty there in 2017, 2018. But again, the time is not quite right. The momentum is not quite right. It hasn't flipped to the bear side yet, even though it broke below the 50%. It needs to wait until that purple line, that momentum gets out. But once again, just like in every case, the move has pretty much already happened to the downside. And I remember this very specifically, sitting here arguing with people about what's going to happen. Of course, gave up another 50% right when that set up, but it did find a bottom there as well. So now let's talk about present day. Not set up to go bearish yet. So at least next week, there's going to be a lot of memeing. There's going to be a lot of hodling. There's going to be a lot of like, it's okay. Volatility is a gift. We should all be thankful that we're getting this opportunity to buy. You're going to see a lot of that. What you need to look for is when you really know that you're in a bear market of Bitcoin is when they start bringing out the on-chain analysis. That's what you need to wait for. That is probably one of the most reliable indicators of a bear market because you'll never see a bearish on-chain analysis. It'll always be like, oh, big buys, big moves, bottom. That's what you're going to see, and that's basically through the process of that, Bitcoin will continue to decline until basically people stop talking about it at all. History repeats. And then we'll see what I want to do. We'll see what I want to do. But at the very minimum, like I said, we could get another all-time high. I'm still manning that case. We still got time in this year that everyone's looking at. The trend is not bearish on the weekly. So it's not time yet. It's not time yet. So I am flat in my Bitcoin shorts. I still see MicroStrategy as being a great short. There's nothing that's convinced me otherwise of that. And so we're going to hang on to that. But it's going to be several weeks before, I mean, really, it's going to take, how long is it going to take for us to get really kind of set up, probably out to summer, late summer, at least, to get this really bearish. Bitcoin is not going to collapse and die. It's not. Too many people have too much invested in it. This is not. And so that's what we're looking at. And as I promised, remember what I said, when we talk about the daily and the criticism is, well, you're going to get chopped up, ha, ha, ha. Well, yeah, you are. You are a few times. There's been two choppy events that have happened here and here in this last bull cycle. But I think it's important to note, if we go back and look, I became bullish in January of 2023. That's when, of course, this set up. That's when it finally flipped bullish after this long bear trend. But if you go to the weekly, this is important, it's not set up to go bullish yet, is it? And so while you're getting some good movement here, you're getting a bull trend, it's not going to be ready to go yet on the weekly. The time frames, any technical setup should work on any time frame. People ask me, like, what's the best time frame for this? Well, the higher time frame is going to be better because the higher time frame is going to rule it. And what ended up happening as this started to kind of jump around was because the weekly was needing some time to get set up. The momentum on the weekly was needing time to get set up. You can call it Wyckoff distributions. You can call it, accumulation, whatever. But, of course, once the weekly got set up, then you had big rally. Of course, that was predicated on the ETF and getting on up there in that sense. And so, there you go. But just using the strategy on the daily is, over time, outperforms. But if you want to optimize it, you can, but don't get too deep in the optimization hole. So, by the way, if you got any symbols to look at, post them in the chat for me. I wanted to also do a quick look. Did I post this? Might be better just to pull up the, Might be better just to pull up the, Now that you've got a recap, you've got a little refresher on what it means when you're looking at Ichimoku as far as what trends go, I want to look at some of the major crypto pairs on with Ichimoku and see just where it is. Because what Ichimoku means is at a glance. You should be able to look at a glance at something and know if it's bullish or bearish. And so Bitcoin, of course, if we if we look on the weekly, it's still bullish, still quite bullish. What if we look at Doge? Not as bullish, but not terribly below the cloud bearish yet. Ethereum, it's dead. It's out. One more week, and basically you're going to get it out in full bearish. And then we compare that to Solana, which has come back into the cloud. As I said, I think last week, I'm actually kind of interested in Solana because Solana has basically taken over the use case of Ethereum, which is, of course, smart contracts. It just does it cheaper, better. And smart contracts have become one of the primary use cases for economic activity in crypto, which is, of course, fraud and grift. That's where our meme coins are coming from. And so if I just don't attach any moral, judgment to it, that's what people are using to create unique opportunities of fraud. It's just better at Ethereum than doing that. And all these are on the Solana chain. And so in order to do this, you need to own Solana. And so that actually creates a bullish use case for Solana, better than pretty much anything else. So again, Bitcoin, bullish. Ethereum, dead. Solana, kind of hanging out. And Monero. So not going to get rich, but if you just look at everything else, just bleh. AVAX, BCH, Litecoin. Litecoin's actually doing pretty good, surprisingly. Tron. Okay, Tron's doing good. Ripple. Ripple's doing okay. And Monero. So I don't know what the rest of those things are for, but I just know that Monero actually is used as a currency. Actually has a use case. So, all right. Yeah, thanks for trying to tell me about the sound. I appreciate that. All right. Let's see. So, any questions about crypto? What do you guys think? So, the next thing, let's go through let's look at the post that I made this week. I'm going to go through this and talk about it. So this is I grabbed this idea. I didn't want to have an argument about it, but I just wanted to answer for myself. What would happen to Bitcoin if stocks were to crash? There's a lot of negativity out there in the stock market, and actually, let me actually preface this with a quick stock market analysis. Remember how we've been talking about the Ichimoku trend? I want you guys to check this out. So if we go on the daily of SPY, the ETF for the stock market, or SPX, whatever you want, it's going to look the same. Yesterday, Thursday, we got below the cloud at the same time that momentum did. In other words, the stock market, by Ichimoku trend rules, it went bearish. Popped up today, but it still hit the rule. It's now bearish. Until, of course, we get back above it. But now it got below it back in January, but momentum wasn't right. It again got below it back in August of last year, but momentum held it up. April of last year, but momentum wasn't out. In fact, it has not done that since September 2023. So this bull trend by Ichimoku has been alive since November of 2023. It's a long time. That is a long time, but it is now ended. Now it may chop like we saw, but I don't think so, because when I look at the VIX, this is my indicator for market timing. It did reach a resistance here. Basically, if you do 50% of the VIX, you can find resistances. These are great timing indicators for market bottoms. It's had a few. There's, of course, in January. And then up here, it held it again. But let me kind of clean this up so we can see this a little bit easier. One of the things that I noted was, and you'll see, VIX is very spiky, okay? You have moments of VIX to go up VIX is the volatility index for SPY index options. What does that mean? Implied volatility is how much the options are priced with extrinsic value, or vega. They're basically what the market is pricing in future movement. And implied volatility goes up when people are uncertain, fearful. That's why they call it the fear index. But, people, it's emotional. So fear goes up and then it quickly returns back to normal. Had a big scare back in August. That's when that big dip happened. And then it comes back down. But you notice how volatility likes to kind of fall off very quickly, right? The thing that I noticed in these last couple of days is that you have a sustained increase in volatility. In other words, it's coming up, it's holding supports, it's coming back down. It's not returning back to normal. The market is pricing in more volatility in the future. That's what this represents. And so it's continuing to sort of step up and make it seem like we're going to have more volatility. And volatility typically means downside, especially when it's been going up for a long time. That in conjunction with what happened this week, with it finally, after over a year, going bearish, ending this bull trend, that has me, just like everyone else who has various fundamental reasons, tariffs, who knows? I'm just looking at the charts. And so the question then is, what would happen to Bitcoin if stocks crash? I got a question. Average price of MicroStrategy purchase is around $66K. If price goes below, does it mean they are wrecked? I don't know. I don't really know. The reason I can't answer that question is the point as far as MicroStrategy is concerned. What do I mean by it's the point? I mean that, let me see if I can find it. Hang on. Is it in my bookmarks? Where's my bookmarks? More. Oh, there. Let's see. Yeah. Let me just play this really quickly.
You could think about what we create is a large information refinery. Everybody
You remember Bitcoin nuclear reactor?
has information, like crude oil. The question is, can they extract any value from it? And up until 1995 or 96, we sat on it, stared at it, we didn't know what to do with it. We created a technology that let you extract the value, and the value would be a elixir that said, here are all the items that are overstocked,
Information
here are all
elixir.
the items that are understocked by store. And up until 95, you couldn't do that. So we answered that question, and they were able to generate tens, if not hundreds of millions of dollars of value by knowing.
And what's funny is that around this time, this was when things were going really well for them, and they started issuing convertible notes in their stock, in their shares. That was basically right around here. During the dot-com boom. So I don't believe in karma, but I believe that people can't help but be themselves. And a tiger doesn't change its stripes. And really, arguably, this was March. It was the big 30, I think it was like a 66% decline in March of 2000. Okay, March of 2000. MicroStrategy, of course, talking about how they've turned it into an elixir. March of 2000. If we go back and we look at NASDAQ, which was, super tech heavy, the bubble really began to implode April of 2000. MicroStrategy was one of the first tech stocks to get in a little bit of trouble. And not saying they collapsed the bubble, but they were one of the first to fall. One of the first tech stocks to fall. And so it didn't really answer your question, because I can't answer your question. I think it's deliberately obfuscated. Now, there's some people that have been digging really into it. They have whole spreadsheets. I respect that. But I think, I'm not sure. I need some, I've heard different accounts of if they have to sell their Bitcoin or not. They have, I think, $48 billion worth of Bitcoin at, prior crash prices. And then they only have about $4.5 billion in debt. And so, but if they got down to their debt level, that's a much, much, much lower price. And I'm not even saying that Bitcoin's going to get that low, because that would be like I don't know, shouldn't say it's impossible. But and the other thing is, he can't. The only way they could start selling Bitcoin is if the shareholders approved of it. And Saylor represents 40-something% of the share value or the voting rights. So he's not going to vote to sell. It's going to be interesting. It's going to be interesting. But, I'm not betting against the religion. I'm betting against the followers. That's really what my short is based on. So it was just very clear to me in November of last year with the fervor with which and certainty with which this was going to be the thing, that I just had to go contrary to it. So is it set up to go bearish on the weekly? Not yet. But it gave up, as I said, it's 50%. And now it's got a lot of room below it to fall down to this area in here. Different from Bitcoin, which held its 50%. But that's because they've got a lot of leverage. I don't know. I don't know if they're going to get wrecked. My put tranches go all the way out to 2027. So we're going to see what happens. I'm already done pretty well. It's already paid for. You're welcome. You're welcome. But wait, okay, let me back up. Hashtag not financial advice. You need to understand that this week, when this happened, this morning specifically, because I saw Bitcoin hit the level, because it's going to be based on Bitcoin. Bitcoin's going to be the driver. I'm not really trying to chart MicroStrategy so much, except for finding strike levels for the puts. But as far as timing goes, it's going to be based on Bitcoin. And so what I did was I sold March 160 puts, because that's the level that I really don't think it's going to go between now and 20 days from now, to get enough theta to go theta neutral. So I still have a lot of negative short delta from the puts. For basically every 3 months, I've got puts going out, down out to 2027. And of course, they're churning a lot of theta, losing money every day. And so I sold to hedge here because, like I said, I think Bitcoin's going to hang out. And so not going to take that theta burn. We'll sit here for another couple weeks, see what happens. Yeah, so that's how I managed it today. So that's why I feel really excited today, because I've been waiting. Good God, I've been waiting for basically. I mean, I'll be honest, I've started shorting MicroStrategy from way down here. Okay, last year, last fall, and been losing. But as wise people say, being early and being wrong are often indistinguishable. And then, of course, I was challenged and saying, what if you're both early and wrong? I wasn't going to be wrong. Just you don't get people saying about how rich they're going to be about something and it work out for them. It just doesn't happen in markets. Like I said, when I put on that short on Friday, it was market, like basically Bitcoin was up to about right here because it was in the morning. So I was very confident, was very, very confident that, it was in the morning, Friday. I was very confident that it was going to flip bearish that day, but it hadn't quite yet. It hit this level. And then throughout the morning, I remember looking, I was like, oh crap, it's going against me. But eventually, it went in my favor. But I've never had a good trade. I never had a good setup that felt totally comfortable putting on the first. Because anything you put on, it's going to flip between positive and negative, or you may have to sit in it for a while. And the big moves, the big money is made in sitting through that discomfort. That's just the way it is. And so when you go out to Twitter to find people to tell you just how great this thing you bought was, you're looking for confirmation bias. And that's not going to work. It just doesn't work. You're just looking to feed that confirmation bias. You have to do what people don't want to do. I mean, the things that have been working the best for me this week, or this year so far, Hershey's and Mondelez. When I said I'm buying candy stocks, I was like, what are you, crazy? RFK. He's going to ban this stuff. Ozempic. Nobody's going to want this stuff. And off their earnings over the last few weeks, 20%, 12%. So anyway, let's talk about what would happen if stocks crash. So I'll start by saying, and I say this later in the thing here, that Bitcoin's never really existed within a true crash, and the true crash being the bear market of the post.com, the bear market of post 2008, and those were very significant events that I didn't really care, I guess. Actually, I was in high school in 2000, and I remember we had a stock trading competition, and it was just very fortuitous that it was 2000. I got into one stock. It was KTEL. I don't even know if that company exists anymore. KTEL, and everyone was buying. They're both candy stocks. Yeah, imagine that. I got into KTEL. It was a tech company. I don't remember what they did. They were doing something, had all these press releases about what they were selling with AT&T. Tech, just tech. All my classmates were buying Coca-Cola and blue chip stocks and stuff like that. I was like, let's buy this KTEL stock. Yes, they did, Goran. They did. Good eye. And that's where I took a little bit of profit. Posted that on my Discord as well. Now they're a position size. I have a trade size when I started, and now took a little bit off. I think in actual NUE, which is another one, that's a materials company, I did a covered call to hedge those shares. 50%. Look at that. Amazing how that works, right? So, but yeah, that was 2000. Then of course you had a bear market after that. Then you had 2008, which was almost like a 3-year bear market. And by the way, crash I define as minus 30% or more. You get little 5 to 10% corrections 2 or 3 times a year on average. Those are just corrections. But then, of course, we had on the chart here, I've got Bitcoin on the top and stocks on the bottom. And if we look, COVID, which is a very short-lived but very intense crash, both went down simultaneously because it was a risk-off event. Oh, crap, we're all going to die. That's pretty scary. Sell all the things. That was what COVID did. But I will say this: Bitcoin recovered quicker and more violently, and that really, that was very nice. So that's something to look at. But in the moment, you never quite know where the bottom's going to be. I knew where the bottom was of COVID. Not saying that I knew, but I went to the grocery store. You remember how we had shortages of toilet paper and all these things because people rushed out and bought it all? I remember it was March 24th. I could look and I could check, but I remember March 24th. I eat oatmeal pretty much every morning. At least I used to. Now I've switched to meat and eggs, basically. But I used to eat oatmeal back when I was a carb consumer every morning. And that was the first day that I noticed at the grocery store that oatmeal was back in the stores. I even said it in a Skype channel, which actually Microsoft just canceled Skype today. But anyway, 2021, we all remember that. Bitcoin, of course, started its top out and went down, but in the context of the stock market deflation, that was when the 2021 bear market of crypto happened. And so, just at first glance, we see there's a certain correlation, but I'm going to dig into the actual statistics a little bit more. So, if you go and look, and I did a little study here. Let me actually pull this up. Hang on. Let me pull up the actual Excel. Because to make the things here, I have to post in kind of a picture, so we can go through here. Let me bring this up. 1 second. Let me pull this up for you guys. Pull up this so you can see it a little bit better. We can go through it a little bit. Don't need to go too granular, but yeah. All right. Okay. Real cool about TradingView is you can pull out the OHLC data. And so I did this by week. And so essentially what I did was I sorted by, let's see, can we see this in OBS? Yeah, that's good enough. Okay. So I went and sorted everything by movement, and we just took a 2.5% movement. I could have done 2%. We could do that. We go all the way down to 2% to see. But basically, when you had a big movement, a big week, big bad week on the stock market, 66% of the time, well, 2 out of 3 times, you would also have a big bad week in Bitcoin. Okay. And then out of the weeks where you had a big bad week, the actual relative movement, the magnitude of it, would be on average a little over than 2x. So, of course, we had the worst movement we had in this study, which, by the way, went back to 2014. I didn't see any point in going further than that because 2013, the stock market didn't have any bad weeks, hardly. And Bitcoin wasn't really mature until later after that cycle. So, but yeah, 2020, that's, of course, February, on the day that the stock market crashed 8%. That's big, scary. We haven't seen that in a long time. Bitcoin went down. Now, 2018, you got a little inverse there. So it does inverse, but most of the time they match up. Big bad weeks. Okay, so that's one way of looking at it. The other way to look at it was, how much of a correlation coefficient was. And you can pull this up as an indicator on TradingView or someplace else. And you can see, of course, real quick recap, 1.0 is a positive correlation. Perfect moves tick by tick. 1.0 that's what a positive correlation is. -1 means they move exactly opposite. So one goes up, one goes down perfectly. That's what a negative correlation means. And you can just see, drawing the lines here, 0 means that there's no correlation. 0 means none at all, no correlation. But if you notice just with your eyes here, you can kind of see that most of the time it's positive. And that's true. In fact, a lot of the time it is very positive. And in fact, very positive is considered by statisticians to be 0.7 or greater. And so how often is it positive? About half the time. How often is it positive? 75% of the time. So most of the time, there's a positive correlation to stocks. How often is it over 0.5? About half the time. How often is it very correlated? About 1 out of every 3 weeks. But another thing is, how often does it actually negatively correlate? It's only less than 2% of the time. So there is a positive correlation from stocks to crypto. And of course, I think that makes sense because they're risk on, risk off. I know that one of these days, if I'm going to steel man the case, nation states are going to adopt it. It's going to magically reach some kind of stability where there's no more any volatility in Bitcoin. It's just going to stay at this really high price, about $1 million, I've been told, and then everyone's going to know that's when I sell my Bitcoin that I bought today in 2025. There's not going to be any more upside to me. I'll cash out and I'll be the king that I feel that I deserve to be. That's one theory. If we go back and we look at which one's this? This is back in 2022. That's the last really kind of bear market we had. 2021, super bullish year. But 2022, sorry, I said earlier 2021. But 2022 was when the stock market made an all-time high and went all the way down for about almost most of the year, from January to October. And in the context of that, Bitcoin had topped out back in November of the prior year of 2021, and it also went down there. So within the context of the last bear market, which was extended, you had, of course, Bitcoin going down as well. Was not very bullish for it. COVID, of course, as I noted earlier, Bitcoin bottomed first and started recovering first, but they still all acted upon the same fundamental event. And so what you have in these two cases is, in the first case of 2022, you had Fed raising rates. In other words, liquidity was drying up. So in a liquidity event where there's less liquidity, stocks go down as well as Bitcoin. Less money to go into these things. COVID, major scare. Everyone's fear is elevated. Sentiment is risk off. I want to go to flight to safety. That meant the stocks go down as well as Bitcoin. Now, some people, they believe that Bitcoin is safety, but that's not what the market actually treats it as. And then 2018 was an interesting year. Not many people were trading Bitcoin then, but two events happened, and I'll give you a little recap. In 2018, that was when the Fed first started trying to raise rates, and ooh, the market did not like that. This was in January, or excuse me, coming into this year. You can't see it on this chart right here. Let me give you a little bit of market history here. Whenever I see any chart that looks like this, I get scared because I have some PTSD. I wasn't super long stuff, but I just remember this crazy January of 2018 where you're just ripping. You don't. That's not sustainable. You don't want to see a thing do that, but you never know when it's going to end. But it ended pretty quickly, and that was when the Fed had a meeting, and they just said, we're thinking about raising rates. Oh, God. Sell all the things. We don't have free money to buy them anymore. That's what basically happened in the first week. And woo, man, that made for a very interesting high VIX, high volatile year 2018. This is when I traded a lot of options. And actually, I got myself in the red in the beginning of this year, January 2018, just like everybody else. But what happened was around about October, you had this little move right here where we had another all-time high, comes down, breaks that weekly, comes back up, holds that 50%. Volatility was, kind of coming back to normal. Grabbed myself some puts on some stuff that was also showing the same thing, and good year. Sometimes you can put yourself in a hole early in the year, and it can take you to the end of the year to dig yourself out. So don't give up. That's my message to you. Don't give up. But that was what basically happened in 2018. So you had that liquidity shock scare in the beginning that tanked stocks. But again, that happened in the context of Bitcoin coming off of its 2017 high. So it was already in the context of the fall off. So we can kind of call that a wash, but it didn't help. Another thing to note is stock market went down 11%. Bitcoin went down 50%. And then when the stock market in September made a high and it went down to that low, which was very good for me, trading options, it went down 20% and Bitcoin went down another 50%. Of course, this is within the whole historic bear cycle of Bitcoin, which nobody really studies the bear cycles of Bitcoin. They love to bring up charts about the bull cycle, but that's a whole half of wisdom that we don't really want to consider because that gives us bad jujus, So, is this a time to go long TLT? I'll answer that in just a second. Let me finish up with this. Hashtag not financial advice. I don't want to tell people what to do, but we'll look at it. I'll give you my opinion. So yeah, in conclusion, I think that real quick, when COVID high to low, stock market 35%, Bitcoin high to low minus 60%, and of course 2022 stocks went down 27%, Bitcoin went down 61%, which again kind of matches up with what we talked about, where the magnitude of the correlation is 2 or more. And so I think this suggests to me it's pretty conclusive, that if we get a stock market crash, Bitcoin will go down to twice as much. So we'll see. People have differing opinions. We're coming up on over an hour, and I've had a lot of fun talking about this stuff. What questions do you have? We're going to look at TLT. If you got symbols to look at, post them in the chat. Just real quick, I know people no one's really asked me, what crypto to look at, because I think they're all just kind of bad, except for Monero, which is my favorite. But I will say this: I'm not buying it now. I talked about this last week. Solana, as I said, as we sort of get into the bear cycle, and that's the thing, like whether the bear cycle begins now or begins later this year, crypto is going to go through a bear cycle. This time it's different, notwithstanding, it will, and that's when probably in about a year or two, I'm going to actually start looking at, okay, now what do I want to buy? I can be patient like that. I don't need to make a bunch of money right now like a lot of people do, and that emotion is what I think hurts a lot of people. But given that, the memes are pretty consistent that, oh, Ethereum, you're at the same price you were back in 2022. Yeah, you are. Ethereum is just not doing well. I know there's a lot of market cap baked into it. I know there's a lot of people still holding it, but as I said, Solana has taken its market share. And so I am not interested in Ethereum on the next bear cycle, but I probably will look into Solana, honestly. Because smart contracts, we haven't really quite figured out what to do with them. We make JPEGs and we do fraud. Those are still things that people like to do with it, and Solana does it better. And there's only going to be it's going to be like Highlander. There can only be one. You don't want to do second best. Even if Laserdisc or Betamax was better, we still went with VHS because, of course, Korn was on it. And so even though the reason people are using Solana is for meme coins and grifts and pump and dumps and rug pulls, it's still the best at it. So, yeah. What's your view on the real estate index? I own real estate. I own rentals, and they are becoming less profitable. Because I think real estate is in a weird state right now, and so I'm not buying any real estate. I'm not selling any real estate. I'm kind of just hanging out. I don't like REITs. One of the REITs that I've always followed, and I'm going to get to TLT here in just a second, is Mort. That is a mortgage REIT, and it, of course, really, really tanked back in 2020. And so when it did, I bought some of it. I probably bought some at about 14. It paid a really nice dividend too because it's being paid by mortgage payments. It's basically an ETF or an exchange traded note, ETF of REITs. Kind of functions as a mortgage-backed security. So I've been getting dividend payments, which are pretty nice. They've probably by now put me back to break even. But it just I just think built into the structure of real estate REITs, which is not your question. I'm talking past you. There's just too much, I think, fees and stuff to make it worth it. So the question is, what's my view on the real estate index? What is the real estate index? I'll look at it. Hang on a second. What is a list of real estate indexes? I've become really, really reliant on Grok. That's not good, I guess, if you don't like Elon. ETFs. Keep. Let's see. I could just use ETFDB. So VNQ. We really need to look on a monthly. I haven't revisited real estate. It's just going nowhere. I don't see a reason to buy it or sell it. So TLT. I haven't looked at TLT in a long time. The bond stuff that I did was back last year when bonds topped out at about 5.5%. That's when I started putting away some cash for an opportunity, and of course, I'm still waiting on that for stock market. Maybe I'm a little biased that that's what I'm doing. I'm waiting on like all the things that were super bullish over the last 12 to 16 months to really kind of fall off, and then I've got some money for opportunity. But I think everyone else does. I think everyone else is sitting on a lot of cash. TLT is definitely down at the bottom. Is this the time to go long TLT? I don't know. I mean, it's a better time to go long than over the last 5 years. But it's if I'm looking at it it's not really breaking up. You're in a consolidation. I don't see it. What is SGov? Treasury bond. It's 0 to 3 months Treasury bond ETF. Well, that's interesting. I just have high yield savings, honestly. Like that's what, and I'm going to close it out with this unless you guys have questions. Right now, like I said, with stocks kind of teetering on an edge, I have cash on the sidelines, and that's where I'm sitting a lot right now. To bring it back to Bitcoin, if you want to be super bullish, there was your opportunity there at 7 285. But just like with the stock market, like I said, this bull trend, which can go on as long as it wants, has been going on for over a year. The actual Bitcoin bull trend, as it began back in January 2023, has been going on for more than 2 years now. And everything in seasons. So you really got to ask yourself when it comes to these risk assets, is it better to be risk on or risk off? Hashtag not financial advice. I think the time now is to sort of sit and wait. I would rather personally sit here and wait to see if we can get another new high, which is what I've been waiting for basically all year. And we haven't really gotten a breakout. It's been very lethargically trying to break out, which is why I haven't been deploying cash in stocks this year, at least beyond individuals. Like I haven't been putting much into VU, VU and chill. But you want to try to get these things at key moments, and we had those. And we're going to see how they pan out. Here's another thing that's interesting, by the way. SPHD, which is I'll leave with this when it comes to stocks. I've noticed this week, SPHD on weeks or days this week where the SPY has been down has been up. Now SPHD is the high dividend, low volatility index. It's made up of stocks that pay dividends, blue chip stocks, things that don't move that much with low volatility, things that pay dividends. You can call that quality stocks, but it's been outperforming a lot, and that's because it has a lot of consumer staples, probably a lot of utilities because they pay good dividends. And so these indexes, so these sectors, consumer staples and utilities, have been doing very well. And that means that I need to, as I'm saying this, say why that is important. One of my most popular videos when I've done it is sector analysis. So I need to go back and redo that. But this is sectors. You can use it on stockcharts.com. But the theory is that there's a sector rotation model where whenever you have like a market bottom, typically technology leads, discretionary, luxury goods lead, and then bull market, you have commercial services, industrials, materials lead at the top of the market, as well as energy, and then consumer staples, healthcare as it rolls over, and then utilities. And so what you're seeing is if you're seeing consumer staples lead, well, let's use this chart right here. So we'll go back and look at the last year to date. So yeah, let's do year to date. Let's do about it's probably about 50 days. So let me just do this. Couldn't paste. What? Hold on. Bear with me. There we go. So there's that. That's the last 50 days. And then here is the theoretical model. So what has been leading? What has been leading is materials, energy, staples, and healthcare, as well as utilities, financials, and real estate. What has been not leading is discretionary, commercial, and technology. So we're not at a market bottom. I think we know that. But we're starting to see, given the sector rotation model, a flight to safety, quality, stocks that shouldn't be too volatile, stocks that pay a dividend, which means they'll pay money even if they're going down. And so we're starting to see, based on the sector rotation model, a rollover. I mean, there's a lot of indicators flying in the face here, and anything can happen. But with looking at the SPY, technically breaking the Ichimoku bearish, VIX, pricing in more volatility coming up, and the sector rotation model all starting to point to a rollover in the stocks. So I want to have cash for an opportunity. And if I'm wrong and we make a new high in the next couple months, great. I'll jump in. But have some dry powder. Have some dry powder. And of course, that relates back to Bitcoin, because if we do have a stock market crash, well, I think I made the case. All right. Thanks, guys, for listening. I hope you found this valuable. If you did, make sure you do a like. And I'll be back next week. So have a good weekend. Trade wisely.